Our forecast was that they would go earlier, though not as early as last year. We thought earlier this year. It took longer because the first quarter inflation numbers were higher, but clearly that has reversed. Inflation concerns, I think, are largely in the rearview mirror, so very naturally there is more weight being put on the employment side of the mandate, and therefore a cut at the next meeting on September 18th is a foregone conclusion. The question is it going to be 25 basis points or 50 basis points? I think 25 is more likely, because we think that the bad employment report of a month ago was probably bad partly for temporary reasons, and we expect the unemployment rate to tick down a bit. If so, I think 25 would be quite likely. However, these numbers are volatile. If you were to see a weaker employment report, I think 50 would at least be a possibility. In terms of recession, I still think that most likely we're going to stay out of recession. We have been consistently in the soft landing, continued growth camp. Right now we're assessing a probability of a recession over the next 12 months of 20%, which is only a bit above the unconditional average probability of 15%, which is just given by the fact that there's been a recession about once every 7 years.
Jan, I think the Fed, in fact, I know the Fed's almost surprised themselves by going from 0.08% to 5.33% over 11 rate hikes from 2022 to 2023. Why did nothing break? It's the question that everyone, I guess, should ask looking at economic history, because historically something would break under those circumstances, or at least feel under a vast amount of pressure. Why this time round did it not break?
Well, I mean, we didn't expect it to break. We didn't expect the economy to go into a recession. And the reason why is that this cycle, in our view, is very different from post-war, from previous post-war business cycles. In particular, the downturn was so much more driven by declines in supply. And that was true for labor, it was true for goods, it was true in a variety of service industries. And so the story of the recovery, really since the spring of 2020, but also since inflation peaked in 2022, has been improvement in supply, which has brought down inflation and at the same time helped output and employment continue to expand. So that is the, in some sense, missing factor when people just look at, what normally happens when the funds rate goes up by X hundred basis points. It doesn't happen in a vacuum, and in this case in particular, it happened with supply coming back, and for me that's the number one reason.